Hey yo, what's up everyone? It's your boy appearing and we are back again for another banger YouTube video. Okay, so today we'll be discussing the 7 tips and tricks on how beginners can start trading like advanced traders. Right, so now I know that many of you guys may be asking yourselves like, how can we do this because we are just new into the markets, right? Yeah, that's true. Practice makes perfect, guys. Nothing just happens overnight, so you just need to make sure that you know what it is that you're doing. Right. So the first thing that I want us to look at is wanting to trade everything. Come on, guys. This isn't gonna work. You see what's happening right here? This is not gonna work, guys. This is too much. This is just too much of things that you are looking at. So first things first that you have to do is first decrease all of this. You go into something, you first have to look at it first. Wait, my WhatsApp, my Wi-Fi is actually acting up right now. You have to look at it first. Remove. Come on, guys. See, it's best for you to minimize all of this, man. Minimize all of this, so that next time you're more clear as to what it is that you're trading. You understand? So you have to remove all of this. Just remove. Start from scratch, guys. Okay, let's say for example you have about 8 things that you want to look into. Okay, that's good, right? You're gonna start filtering down things that you want to trade, guys. So what you're gonna have to do is that you're gonna have to go to your watch list. You're gonna have to say plus sign here, and then you just have to start looking at markets. Like, let's say for example I want to look at the dollar against the Japanese yen, for example, right? I just tag onto that. Right, we have a look at that. Okay, then we have to like go back and see what type of market it's in. Like for you to know which type of market it is that you are trading. It's very very important. Like just looking at it from this point of view. Okay, then you notice that the market does indeed move in fluctuations. Like it does, move in very very good positions. Like so your strategies are going to actually quite work here because the market is it's moving up and down on a regular basis. So what does that mean? It means that now you are able to trade this, because it's not ranging, guys. It's not ranging. You see, it's only these past few years. You see, only these past few years where the market has been ranging, but other than that the market has been moving in a massive impulse. All right, so that's one thing. You have to scale down. You have to look for what it is that you want to trade, guys. You cannot trade everything. You know what I'm saying? So you start from a bigger time frame, and then you start scaling down. You start scaling down. You look for all of these. Like you look for all of these. You go to the GBP, JPY, exactly the same procedure. You look at the market structure. You see what type of market structure it is. If it fluctuates the right way, because one thing that we cannot teach you is how the market fluctuates. How the market fluctuates, it's key. It tells you whether what you want to trade is going to work for you or it's not. The second thing that you guys should look at is pattern analysis. There is nothing that we can do if we do not understand our patterns, guys. Patterns. When we look for patterns, we usually talk about things that look like this, like your head and shoulders, like your head and shoulder positions. How do you trade your head and shoulder positions? You look for this key level right here, or perhaps you want to look for this key level right here, where price is looking for bounces, and then it creates this minimum fake out that we normally know as our head position. So you look at these type of things. Now these type of things will determine if you're gonna go far in forex or not. So now last I remember, I think it was about what, like 8 9 really important patterns that you guys have to look into. Like you get your wedges. The wedges would look something like this, right? You guys have to like know all of this, your market structure. So now you get two types. I'm not going to repeat this. You get your falling wedges, which deliver you a rise in prices, and vice versa, where you get your rising wedges, which deliver a fall in prices, right? And then you also get your, excuse me, and then you also get your pennants, like your pennants. This is market structure that looks like this. It looks like a triangle, but it's in an ascending position, where this thing happens right here. You know, you look for things like that. That's another market structure that you have to look into. You have to look at double tops and double bottoms. I had to join a double top right here, but you guys know, you guys get the gist of things, Where market structure starts moving like this, it comes here, it rejects, and then it shoots towards the downside. And then you also have to look at, your continuation pattern. Continuation patterns, I like these because they are more like flag patterns in some cases. Some cases it's not really flag patterns. So what happens is that price will come in from this point right here, create our first touch, second touch, maybe our third touch, maybe our fourth touch before it breaks out towards the upside. Now remember that our patterns move in a very beautiful way. If you notice, you get an impulse. If you guys notice, you get an impulse, you get a correction, and you get an impulse, right? You get an impulse, you get a correctional phase, and you get an impulse. Likewise here, an impulse, a correction, and another impulse, and a massive drawback. What happens here is very important, before you place these trades, guys. It's very, very important. Now, of course, we already have three over here. Like we have talked about our head and shoulder position. Let me just jot that down really quick. We look at our head and shoulder positions. It's vice versa. You can flip it on the upside as well. And then you have to look at your triangles, guys. Triangles are very, very important. Triangles will look something like this. Now, triangles will actually determine what type of trader you are, guys, because like these type of patterns, like they occur a lot in the market. So, like for example, price will come from this angle here, only for it to start bouncing up like this. Creating our third touch right here before it shoots down. So you guys need to know the type of triangles that you guys look into. So far we have about what 6 market structures right here. And then we also have to look at what you call this. This is other one that I actually forgot, but like yeah, there's actually a lot of these that you guys have to focus into, because drilling yourself into one type of thing it's not gonna work out. It's not gonna work out, guys. Another thing that you guys need to be careful of is your lot sizes. When you trade your 0.1 positions, you trade your 1 positions. So all of these things, 0.01 in terms of volume, you gotta be careful, because if your volume is too high, you can break your account. Like if your volume is too low, it's good, but at the same time you won't see optimal growth. So now you need to be able to make sure that you stay in check with your account size. Like let's say for example, if your account size is a $250 account, if it's a $250 account, then you wouldn't want to trade like a very, very high volume. You'd want to stick somewhere between a 0.5 to perhaps 0.8%. Like you get what I'm saying? But want to stick in between those, because like it's best for you to remain at the center of things, so that you are able to grow at the same time, also be able to manage your account the right way. Another thing that we also need to look at is your leverages, guys. Your leverages, how you leverage is important, because what can happen is this, like maybe say for example your 1 is to 100, perhaps it goes all the way to your 1 is to 1,000, right? 1 is to 1,000 is a risk, guys. I'm not gonna lie to you. Sometimes this is a risk, because now what's happening is that you are taking in more than you can actually handle as an account. Sometimes the brokers not actually want to play you with that. When your account is actually like flowing towards the upside, it's not growing as much as it would if you guys were flowing towards the negatives. That's why sometimes when you realize that, hey, why is it that small difference in price is actually tallies up to such amounts of money, but when price is actually escalating towards our market direction, it's not actually like giving us the possibilities that we're actually looking for. So you need to be careful of those things as well. So now, having us covered that, we also need to cover risk management. Risk management is key. Risk management determines how long you stay in the market, guys. How long you stay in the market is vital. It's important because it tells us what type of trader you are. Let's say, for example, right, you want to start a $250 account. Let's go back and calculate here. If you want to start a $250 account, which your relevant, which your favorite broker, I'm not quite sure which broker you guys are using, but like for me, I use Hot Forex. So yeah, looking at this, right, $250. Now you need to know exactly what it is that you're doing. Now when you say this, we look at things such as risk to reward ratios. we look at risk to reward ratios. Now, your risk to reward ratios are actually very important because this is actually what keeps you in check. Like your risk, you're only willing to risk 2% of your account. You're only willing to risk 2% of your account, maybe to gain somewhere close to around 10% of your account. You get what I'm saying? So now, even it's like, for example, you are willing to lose 2% of your $250 account. So we are looking at an amount of somewhere around what? 250 multiplied by 0.2 multiplied by 0.02. We are looking at around $5. We are willing to risk $5 to make about what, 15, $20. You get what I'm saying? So that's how you look at the market. This is how you look at your risk ratios. And like, if you have to calculate this, guys, I have to trade at least 50 times before I blow my initial account. So what does that tell us? It tells us that I have 50 opportunities to grow my account, 50 opportunities to grow my account. And it guarantees us that there is no way within those 50 opportunities that I will lose all 50 opportunities. That's impossible unless the strategy does not work for you and you do not work for it. So you need to be careful of those type of things, guys. All right. And another thing that we also need to be careful of is trying to get rich quickly. Guys, getting rich quickly is not going to help you in the market, guys, because the market is out here. It's giving away free money, basically. Yes, that's true. But you guys need to be careful. Like, if you guys gonna come with the mentality that I wanna make R1 million or $1 million ASAP, quick, fast, and in a hurry, it's not gonna work out for you. The market is gonna kick you, guys. Why is the market gonna kick us? It's because you are being greedy. These things, they come with greed, and like, if you come into the market with a greedy mentality, the market will show you what it does to greedy people, right? And another thing you have to look into, which is your sixth thing, is called patience. Be patient, guys. Let's say, like, for example, you're waiting for your setup to actually occur. Let's say, for example, that we are looking for this type of setup. Let's say, for example, that we are looking for this type of setup, guys. Right. So we are looking for this type of setup. Let's zoom in for a little bit. Right, we are looking at this type of setup. You see that our market is giving us a nice clean rejection right over here, right? So now, what do we tell ourselves, guys? We tell ourselves that, okay, now the market is giving us this type of thing. Now we have to wait for the market, see how the market is gonna react. Right? I cannot just place a trade and then just expect the trade to go exactly as planned. We have to see what's gonna happen. So now I have to be patient. So now, how am I going to be patient, right? So now we look for something like this. Oh, okay, cool. Now I see something like this. It tells me that the market is going to want to shoot up. What do I do now? I now wait for price to come somewhere around at that particular level before I start placing my drawdowns towards the downside. So that's how we deal with these type of things, guys. You have to be patient. You can't rush all these type of setups. And then now, if we have to continue, what do we notice? We notice that price actually does, reach our setup level, and then it does what? That it shoots down towards the downside. Right. So this is just an example, guys. It's just an example. And then that's what it shoots exactly towards the downside. So you have to be patient, guys. Do not rush the process, because the moment you start rushing the markets, that's when you're not gonna make it out, because you're gonna have this fear of losing out. And why am I not actually winning? Why am I not actually gaining from this? Why are you not gonna gain is because you want to look for setups where there are no setups. So just be careful of that, guys. Be careful of that. And another thing is having messy charts. You see, guys, the cleaner the chart, the better you analyze. Now, if your chart has all of these type of things, like you have your EMAs, you have your bullish, you have all of these type of things, like all of these type of scripts that are running on your background, and like you see that your charts are looking crazy as hell. Guys, careful. These things aren't gonna help you. Instead, they're gonna break you. They really are gonna break you. Like, you guys should be careful, because now, if you are just looking at these type of things and you just want to trade every single thing that you see, and you start looking at all of these type of things, this isn't clean for me. I don't like this. This is too much going on. That's my preference. So now you guys have to be clean. Like, find a way that works for you. Your market has to be clean and easy as possible, because if your market is clean, it prevents this thing called confusion. And if your market is clean, it allows you to see opportunities a lot more clearly. So now you guys just have to hang in there, filter out all of these indicators that you aren't using, that you don't actually need, up until you actually have a nice and clear chart. The moment you have a nice and clear chart, then it allows you to do what? To trade. Trade what? The best way possible. So the moment you guys start remembering these things, start practicing these things and putting it morely into practice, then what do you notice? You notice that now you start evolving as a trader, that from possibly making like 50 losses in the space of like 2 months, you are now dropping down to making 25 losses, to now dropping down to making like close to 10 losses in like a week. Then you start chopping down, because why? Because now you are keeping all of these things in practice. Like, practice makes perfect, guys. The more you practice, the better it is that you become in the market. So as we have said, we're going to be discussing 7 things, right? So now let's go through a quick rundown of what it is that we have discussed already. So we have looked at wanting to trade everything, which means that wanting to trade everything. What does this mean? It means that we need to filter down on the things that we want to trade. Start with 20, filter it down, and then you'll probably end up with around 10 pairs or 10 whatever it is that you want to trade, currencies or whatever. And then from then onwards, you start filtering again, maybe until you fall somewhere around 8 or 6 that you're going to be focusing on for that particular week. Another thing that you will be looking at is your patterns. Understand your patterns, learn your patterns, your pattern construction. Now, when we talk about patterns, we're also looking at things such as your candlestick formation. Candlestick formations. Now, your candlestick formations will tell you a lot of things, like, because sometimes you look at a particular candlesticks and then next thing you know, you learn that, oh my god, this is such a tracement candlestick. Like, these are telling me that price is going to shoot towards the upside. Continuation patterns are telling me that price is going to continue in the direction that in which it has preceded it, right? So you start looking at all of these things, and then you look at your higher lot sizes. Your higher lot sizes and your leverages, as well as your leverages, guys. You have to look at that. Having too much of everything is actually bad. Too much of good things equal bad things, guys. That's exactly what this is telling us. So if it was up to me, I'd actually want to highlight this. This is very, very important. If your lot size is very high, if it's bigger than if it's too much for your current account size, then you are going to make the worst mistakes of your trading career. You're gonna blow out quicker than you're actually gonna blow up, I must say, because I cannot stress this enough, guys. Your leverage and your lot size is very, very important. Another thing is mentality. Our mentality equals things such as trying to get rich. Trying to get rich quick isn't gonna help anyone, guys, because the moment you tell yourself that I want to get rich quick, then you're not willing to learn, then you're not willing to see to your mistakes. What happens is that now you will just start revenge trading, you just start trading the markets in an angry perspective. You are an angry person. So what does that mean? You start making mistakes. Now the moment you start making mistakes, you start tumbling as a trader. You, instead of you becoming profitable, what you start doing is that you start being a losing trader. And now I'm not gonna lie to you, being a loser sucks, guys. It really sucks. Like, for me, I spent a year and a half being a loser. Like I did not want to see to reason. I told myself I wanted to get rich quick. That did not work for me. Up until I really, really had to dive down, jot how I feel. Like, every single time I start making a trade, like, I started sticking to my trading plan. And then the moment I started doing all of that, after 1 month of like practicing what it is that I write down, my affirmations become real. And then I start to notice, and I start to see the light that, hey man, you know what, trying to get rich quick isn't gonna help me, because it's actually gonna end up killing me a lot more easier. So now another thing that we have to look into is called patience. Patience is important. Patience is important, guys. In the market, you have to be patient. You have to wait for your setups, because some setups don't actually appear ASAP. these setups, they take time. Now time is money. Yes, I understand, time is money. Some of us are working on the daily 9 to 5. We do not have time to spend on the markets and like focus. So what we can do, for us who aren't patient enough, what we can do is start placing alerts. Alerts will actually help you, so that by the time price reaches your certain level, what happens is that you are able to give yourself a small message. It's crossing that level. Wait, let me just cancel this. Let's start one more time. Right, perfect. Now price is crossing this particular level, and then I give myself a small message. I am buying because I remind myself I see a small or a minor correction. If it's a correction, if it is a perhaps if we're looking for a continuation pattern, or we perhaps look for our relevant head and shoulders. You give yourself these small reminders that are going to remind you, going to just jog your memory that, hey man, okay, there's a reason why I actually had this alert somewhere at this particular level, and it reminds me, oh wait, I wanted to buy this because I saw this and I saw that. Now what do I do is that I go back into the market and then I start looking for these things again. I start reminding myself. I start gathering all the facts and figures as to why did I want to trade this in the first place. I remind myself. Now remember, guys, when you trade, you build your own story, guys. You build your own story. We cannot build the story for you. You build your own story, because the way you build your own story, you build a story with your own facts, your own figures. Now, the moment you tell yourself that this is good because of so, so, and so, you end up believing in your setup. And the moment you start believing in your setup, you trust your setup. Now, the moment you trust your setup, then you tell yourself that, okay, if this and this doesn't work on, the probabilities might go against me, the possibilities might go against me, because the market works in what? In a probability over possibility scenario. So now let's say, like, for example, probabilities are high in the sense that the market is going to buy, but it actually ends up selling by some mistake. Now what happens is that it takes you out on that stop loss, and then it continues in the direction that you wanted it to go in the first place. Now what does that mean? It means that, hey, I am learning. I am learning because why? I was able to become patient. I was able to start thinking about the possibilities of the market, how the market is actually working. It's all about the psychology. Being patient is key. Now, another thing is having messy charts. Guys, cannot stress this enough. The more you clean your charts, the better it is for you as a trader. Just think of it. If your office is messy, you're not going to be able to concentrate because there's a lot of mess everywhere. You are unorganized. Now, the moment you are organized yourself, then you're going to start seeing some efficiency in the way in which you work. You're going to start seeing a lot of productivity. You're going to start being a lot more productive, and you start spotting things a lot more easier. So these are the 7 key points that I actually want to give you guys if you're a beginner and that you want to advance and become a more profitable trader. And let's say in the next 3 months that you're going to be working towards these things. Remember, guys, Forex is a new language. In order for you to be able to trade something you're not familiar with, you have to first understand the lingo, understand the street talk, understand the pips, the values, the patterns, the head and shoulders. The more you start absorbing all of these things, that's the more you start growing as a trader. You understand? The more you start growing as a trader, then you start to realize that, oh, I've been making mistakes here and here. I've been doing this wrong. I've been doing that wrong. I jot down my emotions. I'd be able to learn from the mistakes that I've made in the past. Now, what does all of that mean? That you've created this journal. There's something that you can look back at and reference. Now, the moment you are able to do that, to reference all of these emotions, they come back to you, and then you'll be able to deal with them a lot more better. So now these are the 7 tips and tricks as beginners that you guys should focus on, because at the end of the day, the market is up to you guys. You build your own story. We cannot tell you what to trade, even if we do provide signals. Signals are useless if you, as a trader, you do not know what it is that you're doing. You do not know how to scaling. What is scaling? Oh my god, I do not know what that is. So make sure that whatever it is that you do, guys, you do your research. Extensive research is key. understand what you're doing, because the moment you understand what you're doing is the moment where you're gonna start, being more productive in what it is that you're doing. The more you start, understanding things a little bit more better, that's the moment where you start growing. Growth is inevitable, but the only way for you to grow is for you to first realize and to learn from your mistakes, because that is where everything just lies. You grow, grow, grow. Ladies and gentlemen, my name is Apio Nguenya, and this was the seven tricks on you on how to become a more profitable trader in the next maybe a year, maybe 6 months. I don't know, but it depends on how serious you guys are with the markets. But this is our video. Make sure that you like and you subscribe, and make sure that you share this video towards more people. Cheers, and we out.